Namaskar and good afternoon. Today we will see IDFC FIRST BANK with reference to its Q3 FY23 results. IDFC FIRST BANK engaged in the business of banking services. It was after the merger of the Capital First and IDFC First Bank has emerged. The MD and CEO is Vaidyanathan. Now, some of the ratios we will see first, then we will go to other details. The capital adequacy ratio is 16.74%, is improving. Net interest margin 5.96%, very good. Gross NPA 3.76%, reasonable. Net NPA 1.53%, it has come down further. CASA ratio has increased a lot. 9.88% was there in FY22. Now it has come to around 50%. Presently, the bank operates a network of over 641 branches and 719 ATMs across India. It is there in north, west, east, south, everywhere. Company is transforming itself from a corporate focused, in fact earlier it was obsessed, low NIM bank to a retail focused high NIM bank now. The bank is scaling up its digital cash management solutions, trade, forex, wealth management, FASTag. In FASTag it is number one actually. Toll acquiring business and credit cards. It has also introduced new variants for current accounts. Earlier, the company was borrowing at 7.6%, funded largely by high-yield infra bonds. Now the focus on infra has come down drastically. Based on high CASA growth, now up to about 50%, the cost of funds is now has come down very greatly. It will come down further also. It is focused on bringing down the cost and improving the NIM. So the retail CASA deposits and retail term deposits are increasing now. The retail and commercial loans are increasing 35% of the total funded assets earlier. Now that is also going up. At present they stand at 72% of the total funded assets or even more. Profitability is improving. But then, as we will see, on a face value of 10 rupees, it is still less than 1 rupee. Asset quality is very good now and it is improving. The price range is low. As I said, price depends upon EPS and earnings per share and price earning ratio. So 52-week range is 28.95 low and 64.3 high. Volumes are very good, 32 million. So buying, selling in IDFC First Bank is not at all a problem. Market price currently is 58.80. Q3 EPS is 0.99, slightly less than 1 rupee. So it is still at the bottom, but improving very fast. Price earning ratio is 14.84 based on the latest statistics. Face value is 10 rupees. Market cap 36,683. Sector price earning 25.64. Book value per share is 31. 31 is nothing. So it has to improve a lot further, but it is improving. Now let us look at the statistics of the Q3 results. Interest and discount on advances and bills 4,999.8 crores in Q3, 4,603 crores in Q2, 3,599 crores in last year Q3. The improvement is 38.9% in year on year and 8.61 quarter on quarter. So that is good. The improvement 38.9% year on year and 38.61% quarter on quarter in interest on advances for bills is good. The second one, income on investments is low, 823 crores in Q3, 801 crores in Q2, 687 crores in Q3 last year. So improvement is 19.8% year on year, 2.65% quarter on quarter. The other ones are very small. Then we'll go to other income. Other income consists 1,152 crores. Previous quarter 1,061 crores and year ago quarter 769 crores. 49.8% improvement year on year, 8.58% improvement quarter on quarter. Interest expended 2,625.9 crores in latest quarter, 2,467 crores in the previous quarter, 1,849 crores in Q3 last year. So 42% increase in the interest expended year on year, 6.43% quarter on quarter. So the improvement is very good. The improvement will continue. Operating profit 1,277 crores year that is in Q3, 1,184 crores in Q2 and 783 crores in Q3 of last year. 63% improvement in operating profit, that is impressive. 7.82 crores, 7.82% quarter on quarter improvement, 63% improvement year on year in operating profit. Both are very good. Provisions 450 crores in Q3, 424 crores in Q2, 391 crores in Q3 of last year. So 15% improvement year on year, 15% increase. We cannot say improvement. If it has increased, it is bad. Provision should not increase. Provision should come down. But anyway, 450 is quite manageable. 6.14% quarter on quarter. Net profit will come to 617 crores year in Q3, 567 crores in Q2, 290 crores only in Q3 of last year. So this is where the company has scored. 290 crores in last year Q3, 616 crores in current year Q3. Great improvement, 112% improvement year on year, 8.71% improvement quarter on quarter. Equity is high, 6,237 crores. Basic EPS is 0.99, less than 1 rupee. Face value is 10 rupees. So, but EPS has grown. See, 0.47 rupees 5 quarters ago. That is last Q3 it was 0.47. Now it is 0.99. That is impressive. 111% growth year on year is impressive. But after the improvement it is still less than 10%. That we will have to be watching always. Percentage of gross NPAs is 2.96. Gross NPAs has come down from 3.96 to 2.96. That is very good. 25% it has come down. Net NPA has come down from 1.74 to 1.03. That is 41% reduction. So NPA management also is very good. Customer deposits, how it has gone up from Q3 of last year to Q3 of current year. 85,000 crores last year, 1,24,000 crores current year. That is in Q3. CASA ratio 51.6%, now 50%. It is okay. It is going up, but percentage wise it is down to 50%. CASA also is very, very good. Gross NPA at bank level has come down from 3.96 to 2.96%. Good. Net NPA has come down from 1.74% to 1.03 provisions. Provision coverage ratio has increased from 67 to 77. Very good. Profit after tax has increased from 281 crores to 605 crores. Return on assets has increased from 0.64% to 1.11%. Still it is very low. Return on assets is still very low, but it is improving very fast. That is what matters. ROE, again, same thing. 5.44% to 10.74%. 10.74% is not bad, but lot of room to improve. Capital adequacy ratio has improved from 15.38% to 16.06%. Total funded assets has increased from 1,21,000 crores to 1,52,000 crores. Now, at merger, the bank had deposits and borrowings as 1,05,000 crores and the retail deposits only 10,400 crores. From there it has grown. Now the retail deposit base has at a 3-year CAGR of 84%. So deposit side transformation is now complete. Retail deposits now constitute 77% of the customer deposits. So this is fascinating. This is good. CASA deposits were 8.68% only in December 18. Now it is 50%, which is very good. Company has got trailing 12 months EPS growth is high. Quarterly growth in revenue is very good. Net profit and net profit margin quarter on quarter is very good. Increasing revenue every quarter for the past 4 quarters. So revenue has been increasing. So bank is aggressively going for CASA deposits, etc. Increasing profits every quarter for the past 4 quarters. Zero promoter pledge. That's also good. It's not a government bank, but still promoter pledge is 0. What are the weaknesses? Though company is repeatedly declaring profits, it is not declaring any dividends. Interest coverage ratio is increasing but still low. Low return on equity. Contingent liabilities are high, 2,15,754 crores. Earnings include other income 3,901 crores. But banks are having other income. All banks are having other income, not just interest income. Promoter holding has decreased over the last 3 years. Now company has got some high debt. Promoters pledge is 0, but high debt bank, see the history of the bank shows that it took debt and funded its growth. Now it is funding from retail deposits and CASA deposits, etc. ROCE is declining. Mutual funds have decreased their holding. But in spite of all these things, brokers have upgraded their recommendation and target price in the last 3 months. Price has recovered from 52-week low very quickly. The IDFC FIRST Bank says it is comfortable with its exposure to Adani Group companies. Adani group companies are making their payments quarterly, regularly. There is no problem, no default, whatever. So those companies are having strong cash flows and operating models, and therefore IDFC First Bank is comfortable with the exposure. Separately, Dinesh Khara, chairman of State Bank of India, also has told Bloomberg, that its loans to Adani are backed by cash generating assets and overseas exposure is nominal. So banks are not worried about the Adani exposure. Now price is just 8.55% away from 52-week high, which means investor interest is good. Then Piotrowski score is 5, which shows average financials. As I said, the EPS growth is still 0.99 on a face value of 10, but it is growing. Market cap is above the industry median. Price earning ratio is above the industry median. Price to price earning ratio also is good, but EPS itself is not good. Promoters have decreased their holdings from 36.47 to 36.38%. Mutual funds have decreased their holding from 4.09% to 4.01%. FIIs, FPIs have increased their holding from 19.28 to 19.76%. Institutional investors also have increased their holding from 33.35% to 33.6%. The past price performance indicates that it was never a multi-bagger. So will it be a multi-bagger in future? Likely. If it is improving its tally as at present in the next five quarters, so by next, when we review it after 1 year, that is Q3 of FY24, when we review, probably it may be a multi-bagger, who knows. IDFC First Bank issuance business has crossed 11 million FASTags. You know, FASTags on the roads, wherever there are toll plazas, that FASTag is certificate is issued by the banks, that is red, and the vehicles are allowed to pass quickly. There, IDFC First Bank says its tally is the highest. Largest acquirer bank with 500 plus toll plaza and parking merchants. So IDFC First Bank is an improving bank, but still its current EPS is low, NPAs etc. are comfortable, not much exposure to Adani. The retail and CASA business is improving a lot. Presently it is a very comfortable 50%, but it will take a long time to come to the level of say other big banks like IndusInd Bank etc. It will take a long time, but it is improving. So that is the important thing. Thank you for listening. See, many times I don't make a recommendation of buy or sell, because every individual's needs are different. If you are willing for waiting for 3 years but always looking at the quarterly results every time, some low-lying companies like this IDFC First Bank may be for you. But people who want high flyers like IndusInd Bank etc. etc., for them IDFC Bank may not be suitable. So therefore I am not making a recommendation of buy or sell. Now I have given. Now I always say, listen twice or thrice or 4 times before you make your decision. The decision is yours always. And once you make the decision, once you buy, you will have to look at the quarterly results every time. If it fails for 2 times continuously, as far as I am concerned, it goes. No sentiment. Thank you.